Okay, everyone, thank you for joining me, and we are going to get started right on time. Looks like we're all piling into the room here at once. There's a nice big crowd. Love to see that. And with that said, let's get started. New automated trading secrets, options, and futures trading. And we're going to look at even a secret option strategy, one-touch trade alerts, and we can do this with up, down, and even sideways or non-directional markets. So remember, we're speculating here, and speculators accept risk, just like from the movie Trading Places there. So we're trying to make money as prices move up and down, but there's always risk. So do take a moment to look at the risk disclosure. Remember that past performance is no guarantee of future results and that all funds committed should be risk capital. All right, with that said, let's look at technology experts are using, something you've never seen, how to diversify among global markets, and how we can do this in bull, bear, and flat market conditions. So we want to end up like the robot here without all the struggles of this poor chap here. So automated futures systems, fully automated risk and profit controls in various market sectors. So that's the first thing we're going to dive into. Then we'll look at algo-generated options trading, pre-built option spreads. You'll never have to create another option spread. One-touch alerts. These are integrated with your account. You've never seen anything like that. And then, of course, automated risk and profit controls with options trading as well. So stick around. We're going to get through a lot of material, and we're going to have a great presentation for you with these two live demonstrations. Then I have a special offer, something worth over $32,000. And because it is a live webinar, we do give an enormous discount and even make it available free. So if you like what you see, we'll show you how to get on board and take action. So a little bit about us, 3 trading secrets, algo trading, a live demo of the trading robots, as we call them. Then we'll look at the one options market. You really need to be trading with algos, and we'll have that special offer and then some FAQs. So feel free to ask questions as we go, and I may not get to them during the presentation, but towards the end, we will have a section for that. I'll probably answer a lot of questions as we go. So who are we? We are AltaVest. We've been doing this since 1997. We are a registered introducing brokerage firm, and we're of course licensed and have multiple decades of experience. There's yours truly with some of our staff trading S&P options on the trading floor a few years back. Of course, the trading floor is different now. It really is automated with machines, and that's partly what we're talking about. So you may have seen some of our presentations and heard about us with some of our partners in the past. Maybe seen us on Market Watch. There's a little article from last week talking about gold. So we do get out there. We have some exposure, and of course, we're regulated with the NFA and CFTC. We're located in California. Here's the NFA and a clearing firm and some of the other regulators that work within our industry. And we are futures and options experts. So we've traded millions and millions of contracts. And I think that's important because you don't want to end up like this person here trying to do this solo. Use our experience to your advantage. Trading solutions built with experience. Really decades of input and development over this period of time. So, and who am I? I am Erik Gebhard. I've been doing this about 30 years now. I have my BS in Business Administration from the University of Southern California. And back in 1991 is when I first became registered in the futures industry. We've done many presentations over the years. Maybe some of these you've heard of or seen in the past, and if not, that's okay. We're going to keep doing them. And with that said, sometimes people will ask, how did I get started? Well, this is a textbook. That's my book from an investments trading, an investments course actually back at USC. So there are my notes in my book. I enjoyed the class, and we were studying futures and options at the time. The crude oil fields were burning in Kuwait. Gold prices had jumped. Crude oil prices had doubled in value from 20 to 40. So that is the backdrop in which I learned about trading. And I was in the securities industry for some time with my Series 6 and 63 licenses. And since 1991, I've been registered in the futures and options space. And just for kicks, there I am, one of my first jobs way back when. So with that said, I think what I'll do is we'll go ahead and turn off the webcam for the moment now that the introductions are out of the way. That way there's more room on the screen to see the demos. Okay, so let's jump into the 3 trading secrets. Day trading, it's not easy, even though everyone's a day trader now, so it seems, since the pandemic in particular. But how do you really successfully trade something like this? I know there's a lot of headlines about the few people who are somehow making millions as they catch some of these massive moves, but that's really the exception to the rule. And why do I say that? Well, here's a study. This is a group of people that used to train day traders, and they've determined that 3.5 to 4.5% of the people produce consistent profits over a period of several years. Here's a Journal of Financial Markets. This is a study they did on day trading. It says here less than 1% of the day trading population is able to predictably and reliably earn positive abnormal returns net of fees. So keep that in mind, folks. If you're doing it successfully, it's not to discourage you, but if you have this idea of retiring from your job and becoming a full-time day trader, you can do it, but it's swimming upstream, to say the least. So we're not day trading. So obviously, we're going to get into that. And number 2, here's this next secret that really, these are not so much secrets, but they're almost stating the obvious that we seem to forget. Holding precision. Now, what do I mean by that? You have to be correct with all these different elements if you're going to successfully trade any kind of asset class, really. And I'm seeing a bunch of people asking questions and comments, and I don't want to get too off track here. So we'll go ahead and keep moving forward, and I'll save some of these questions here. I will answer one thing here. Someone's asking if this is Forex trading. No, it is not Forex trading, but we do trade currencies, not on the Forex market. We're trading futures markets, so you can trade currencies like the euro and the pound and so forth. But with that said, I will go ahead and keep moving forward here. So you have to pick the correct market, direction, strategy, entry, timing, and price, and then exit your manage and your risk and your gains as well. So number 3, this is the biggest one, I think. Not so much a secret, but again, I think we have to step back and realize we need to control our emotions when trading, just like this chap from the movies here. Remember, it's expensive trying to convince the markets that you are right. It's from Ed Sequoia. He's a system trading pioneer from the book Market Wizards. So this is really what you want to avoid, folks. You do not want to end up in this position where you're arguing with the market. And remember, we become our own worst enemy. You have fear, hope, greed, anxiety, frustration, boredom, greed, all those things running through your head every time you're trading. And even if you're a seasoned veteran, it still happens. So we have bad wiring. We have a built-in bias to make poor investment decisions. We chase past performance, like sell the bottoms and buy the highs. That's really what that says. So how many of us can relate to that? I know I certainly can, even after all these years. Remember, our brain is killing our returns. I think that summarizes everything I just mentioned here about the emotions. And just to dig a little deeper, and then we'll move forward, the Motley Fool says, sometimes our worst financial enemy is ourselves. We have 3 common biases: confirmation, anchoring, and recency bias. We won't go into every detail on that, but here's a good example in a cartoon. This guy here says, my stocks are doing great. What else do I need to know? And he's got, of course, blindfolds on. Meanwhile, all the headlines are doom and gloom. So with that said, let's jump into the algos, and they have no emotion, and they are dominating the landscape here. I'm sure you've heard all about this and read all about it, but 80% of the stock market is now dominated by machines causing sharp drops and rallies, large institutional firms commanding 80% of the market. And even last year, remember the algorithms in March when the market sold off, they were speeding up selling, leading to the fastest bear market in history. So remember, the algorithms are in charge, folks, not all of us just sitting behind our desk And even Bloomberg says here the robot analysts are outwitting humans on their investment picks. It's called revolutionary trading. I like that cartoon. And here's a quick little video I took years ago visiting the trading floor, just to give you an idea of what it used to look like. So that's what it used to look like, all the trading, and this is what it looks like now. No emotion, these run automatically, built-in controls. And even with that said, let me tell you something here about what we're going to show you in just a minute on the demo. Diversifying your stock portfolio with automated futures trading. So for example, what am I talking about? Well, there are many systems, and we're going to look at a lot of them. And let's take a look at why they're important and why we like them. Here's an example of looking at what happened in March to the stock market. As you know, S&P 500, NASDAQ was down 35% in a month. And here's the VIX correspondingly moving rapidly higher. No surprise there. But if you were in the stock market and you were a passive investor and you just bought stocks and held on, you're sitting on a very large drawdown. But meanwhile, some of these systems, we're going to look at them. Look how they performed during the month of March. And yes, past performance is not a guarantee of future results, and not all systems are going to perform equally. But just want to point out an example of where you have non-correlated returns or even an inverse correlation. So we don't have to simply just buy and hold all the time, and that's the point. And we're going to look at these algo systems. We're in a super cycle, commodity trading super cycle, according to JP Morgan. Here's what that looks like. This is an aggregate of commodity prices since May of last year, and a large bull market. And if I had a larger chart, you'd see this is actually a very narrow window wherein we could, at least historically, move dramatically higher from here. This is the CRB index. But how can you put this all together? How do you use algo systems to compete in this landscape? So the AHA solution, as we call it, automated systems. They are user-friendly for novice or advanced traders. You can filter for all the systems on risk and reward parameters or type of trading or what have you, and I'll show you that. You can diversify among various market sectors. You can automate. All these systems are automated, of course. That's the whole point, all the risk and profit controls. And what you do is you set the system to off or on. If you set it on, you just walk away, and the automation takes care of everything else. Doesn't matter if the markets are moving up or down or what market it is. There's day trading systems and swing trading across multiple sectors. So here we go. This is the test pilot here. We've done all that testing for you, and now we're going to show you the technology. It's a fresh approach to trading. Time to meet what we call the new robot friends at AV Systems. All right, we're going to jump into the demo, so just give me one moment, folks. All right, so now you're looking at the dashboard for AV Systems. And I'm sure you'll let me know if you can't see it, but I think you can. It's always tricky. There's multiple monitors and so forth running these webinars. It's not always as seamless as it appears. But anyway, here we are. This is the dashboard for the AV Systems platform. And I will go ahead and run you through this step at a time. Number one, we'll explore the systems. We'll show you how to license a system and use it, essentially pay the developer. Then you can activate that system. And then once you've activated it, you'll want to monitor performance. So there's really just four things that we're going to do here. Then first of all, you'll notice on this page, there are 25 systems here. Each one of these, sometimes these names are kind of crazy. That's because the developers just choose various names that they like. And you'll see there are 2020 to be exact, systems available. Now, that seems like a lot, and it is. And you're thinking, how would I know which system to choose? And we're going to tell you that. We're going to show you that. Let's demonstrate that. But first thing I want to point out is this table here with all the you could call it the headers here, or the titles. You can sort these by ascending or descending order. For example, annualized ROI. We'll click on that and go ahead and sort these in ascending and descending order. So you see the worst system here is negative 14%, and the best is 573%. So those are huge numbers, but keep in mind, the bigger the percentage return, the larger the risk as well. And just want to show you that you can sort these in ascending and descending order. Now, let's look at customizing this table. Maybe you're not interested in some of these particular titles here. You can see all the different titles available so that you can have this table reflect what is interesting to you. Perhaps you're not interested in the name of a developer or what's called the TM rating, or maybe not the profit factor. And instead, you want to add best session. I'm just kind of making this up as we go, showing you the flexibility here. Now the table reflects what you have selected, or you can, of course, go back to the default setting, and that's fine too. So we'll just go back to default. Now, the next thing you want to notice is this field here. You can type in any market, and you'll see here market traded. These are all the gold systems. There are 130 here available. Maybe you're looking at the euro. Looks like there's 97 systems. I don't know what else. Let's see, crude oil. Crude oil, 138. NASDAQ system, 189, so on and so forth. So you can find a sector this way, just with this field, or the most powerful tool here, and this is really where you're going to spend some time, and this is really the most fun, I think, is the filtering. So you'll notice there are some default settings or quick filters here. And this one, for example, all systems that have been tracked on this platform for more than 1 year, and they are profitable. So if you click that, you'll notice now there's a universe of 596 that meet that criteria. You could add another filter on top of it. Perhaps you want to look at systems that have met that filter, as well as the systems have clients with required capital less than $5,000. So now you see there's 50 systems that meet that criteria. And then you could edit any of those criteria here, just with this little pencil icon. You could change the numbers any way you wanted, or you could just simply delete those filters or just clear them all at once. And here is the advanced filter tool. You're really going to like this. So the quick filters are very powerful, and I think they offer a great start. But really, if you want to drill down, this is what you would do. You would use the advanced filtering tool, and you'll see all the descriptors here. You can filter for total P&L, live P&L, annualized ROI, best session, percentages, worst session, the type of market traded. Does it have clients? Is it intraday or swing? So let's, for example, we'll look at intraday systems only, and we have 871. Let's add another filter, annualized ROI. I don't know, let's do this. Just pick a random number. There's 845 that meet those filters now. And suggested capital is a good one. We always use suggested capital, and I'll tell you more about that. Maybe 25,000, 5,000 to 25,000. So there's 211 systems that meet those criteria. All the filters here, you can see them listed. And perhaps we'll add if it has clients that are trading it with live money. Yep, so now you have 55 that meet all these criteria here. And of course, you could modify any of these filters, or you could keep adding more and more. And by the time you're done, you might have just a handful of systems that meet the criteria that suit you. Remember, you're trying to pick systems that you like, that are suitable for you based off of your interest and your risk and reward profile. Maybe you want systems that are only day trading. Perhaps you're looking at a particular amount of capital. Perhaps you're looking at a certain historical performance, whatever it might be. So I could go on and on, but we've got more to get through, and I just wanted to give you a demonstration of how to actually filter and use that tool. So you just click OK, and you'll see you have 4 filters running, and now you've got a total of 55 systems that meet all the criteria listed here. Or we can just do this. We can clear all filters, click OK, and now we're back to where we started. And we'll go ahead and make sure we have the default setting here for the table, and we're kind of back to where we started. And now the next thing is, we've showed how to filter, but what if you want to choose a particular system? Well, you can do it in a couple different ways. Just right on the page here, you'll notice any of these systems. If you go ahead and just click on one, and I have not clicked on this, I don't think I know what this one is. There's a lot here, but I'm just going to pull it up anyway. Here's a mini Dow Jones system. You can see it performed very, very well, had a nice run up, hit a peak, and now it's in a drawdown. But this is what you would do if you're looking at any particular system if you want to drill deeper. And I'm going to show you in just a second. Give me just a second here. I'm going to show you exactly how to analyze that. The one thing I want to show you is there's a star here, and you can take any system and click on it and then make it a gold star system that becomes a favorite. So then once you've done that, you can then sort by ascending or descending order in terms of these favorites. So you can see there's some here that I've saved. So these are some favorites. And let me point out, well, let's go look at copper. This is a funny name. I like the name here, Samurai Copper. So who knows about copper? Well, we don't have to know about copper because the algo does all the work for us. But let me point out something here on this particular copper trading system. Let me use this as an example. We'll walk through this together. The name of the developer, Trading Copper. It's a swing system. It's $75 a month. And that is deducted directly from your trading account. That's the amount of money that goes to pay the developer, the one who built the system. And you'll notice here total P&L, tracked P&L, live P&L, and I'll explain that in just a second. First drawdown, here's your suggested capital, and this is important. This is the number that all of the performance data is based on. So all of your percentages and dollar figures are based off of the suggested capital amount. So that's the number you need to trade that particular system. And you'll notice, of course, we're looking at all the history, but you could choose to go back and narrow down a window of time. And let me show you this here. All of these little icons, you can click on these and get a description for what these definitions are. I won't go through all of them, but you'll see percentage winning sessions, 59% of the time. And your best session was 39.75. The worst session was very similar, so on and so forth. But this is really the key here. Let me show you this table right here. You'll notice everything in a white background, it says back tested. So that's all back tested data, and they use slippage, all trading costs, and everything is factored into the back testing in a very conservative manner so that as it's trading for real and forward tested, the back testing results are basically paralleling that moving forward. So they account for slippage and all trading costs. So everything here in 2017 and 2018 was all back tested data, hypothetical back tested data. You can see it had some great big numbers here in those 2 years. And then what happens is when it turns tan, it becomes tracked. So now the system is now placed on the AV Systems platform. It's now available on the platform. People now have access to it. Clients can then trade it. And you'll see here in April, it turned green, and that means that's when people started trading this system with real live money. So this is live trading since April of 2019. So you've had a good year in 19. 2020 was a really great year as well. And let me show you March of 2020, just a year ago when the stock market was going berserk. So here is an example of what we kind of talked about just 10 minutes ago in the presentation, where you have the stock market and all financial markets essentially moving down. Yet here you have a trading system that really has no interest in what direction, what's happening in the financial sector, or even if the copper market's moving up or down. It's simply a swing trading system, and it's going to buy and sell no matter if the market's moving up or down. So you'll see the very first day, the cost of the license is deducted from the account. And then you'll notice the P&L, there's a running total here, accumulated P&L. So you made some money, gets added to the accumulated P&L, had another big winner here that gets added to the accumulated P&L, so on and so forth. There's a string of losers. And I'll keep in mind that when you look at something like this from in the rearview mirror, it tends to look easy. You kind of think, oh, well, all you had to do was turn the system on and walk away, and you made money. And that's true. That's exactly what would have happened if you were in that live system. But you'll also keep in mind that there are times where you're going to have some losses on a particular day, or even 3 days or 4 days or 5 days in a row. So you have to be willing to really withstand those ups and downs. And we're going to show you a little bit about that. But here's an example of really how you drill down. Just click on any month, and you'll notice here in June and July, for example, I pointed out how you have to withstand those drawdowns. Here's a $6,900 loss and then $3,200 loss 2 months in a row. So you're looking at, $10,000 drawdown in those 2 months. And, maybe at the end of July, you think, oh, gee, this isn't working. And you decide you're going to just close the system out. Well, then you start missing all these big gains. So we'll show you just a little bit more about that. But I just want to point that out. That we like to leave the systems on. Once you turn one on, I think it's best to leave it on for a period of time rather than try to, get in and out, day by day or week by week. But here's the trade log, so you can look at all the trading activity. Everything is transparent. Nothing is hidden from you. Or you can look at the session log. So you'll see here on the 23rd yesterday, by the end of the day, it was flat. And you can look back here on the 9th, for example, it was still short. So basically that's what that means, -1, it was short position by the end of the day. And you can go backwards in time, you can download that data. I just want to point out that it's all visible. Nothing is hidden. You get to see all of the trading. And you can also look at this chart here based on what they call a scatter plot or drawdowns if you want to just focus on what's the worst performance and what does it look like. Well, there it is right here. So you can see the worst drawdown was kind of what I pointed out right back here, those 2 months. So there's just an example of how you would drill down and look at any particular system. You can click on any one of them. Just click on a soybean system, for example. And you can see this one has a lot of back testing, and it's been on the platform, and it's really sort of kind of going sideways. Not a whole lot of progress on that one. Here's this one here is an E-mini S&P, and we like the E-mini S&P and the NASDAQ a lot. So you can see this had a tremendous run up here in March of 2020. Look at that big number in back testing, and then it went live, and you can see it's month by month how it's performed. And then you can see the ones that are blue, and I'll explain that in just a second. But for example, here's an S&P system. It's pretty choppy, so it doesn't really matter. That's not the point. I just want to show you how to do this. You can do it one of two ways to activate a system. See these padlocks here? You can click on the padlock, or you can just open the system up, and you can click the padlock here. You click buy license. It'll ask you, you're going to buy 1 unit, trading 1 contract. You subscribe. You read the disclaimer. You click accept. And let's see if we can activate it now. This is just a demo account. I don't even really have, obviously, any, there's no real money in the demo account, but let's just see if this activates. And if it doesn't, it means there's not enough money in the demo account, and that's okay too, because that's a risk control. So that if you have this, that if you're using AV systems and you try to activate a bunch of systems and you don't have the money to do it, you won't be allowed to. So you can activate immediately on the next entry, next session, or at or better on the next entry. So let's just go immediately activate. Let's see what happens here. Either way, it's fine. If it activates, that's great. If it doesn't activate, that's great too. Let's just find out. Okay, so it's active, and it's called the Newton. Let's take a look here. And let me show you where to go. Now that you've activated a system, you go to My Systems, and you'll see it right here. It's called Newton, and you can see it's currently short 1 position. Last traded at 39.13 is where it was short from. It has a buy stop at 39.29, and it's currently profitable by $17.50. So you can see some of the other E-mini S&P systems that we have running in this demo account. See if this will help expand it a little bit. And so you'll see some of these systems here, and this one here is currently long 2 contracts. These are all flat at the moment. You can see the accumulated P&L on this one here is quite good. These are losing a bit of money so far. That one we just activated is actually, you can see it kind of gaining right here as we speak. Interesting. You'll notice gold is flat right now, this gold system. Accumulated gains here, did lose today. There's a NASDAQ system, lost money today, but accumulated gains and so forth. So mini Dow, and here's soybeans. And so for today, these systems at the moment are losing about $1,700, but the accumulated P&L is about 24,000, almost 25,000. So this is kind of typical. These systems are going to trade back and forth, up and down. And by the end of the day, some of these systems may be more positive and or not, or might be worse. It's just hard to know. But the whole idea is you get a portfolio of systems running, and they have a completely non-correlated return profile to what's happening in traditional asset classes. So that's why we like these a lot, and we think it makes sense to just let these run. Now, here's a question we get. How do you turn them off? Well, if you want to turn a system off, you click this here, go to Stop Strategy, and you could click Stop Immediately or just not take the next entry and then deactivate. It's just that simple. So really, the idea is to let these run, you activate them, and then just let these systems run, and the algorithms are doing all the trading for you, and really it's just that easy. And you can look here, everything again, I want to point out, is fully visible, so you can see all the fills in all your systems, telling you all the type of order that you used, a market or a stop or a limit. You can see the fill price. So you can see any orders that are in place. You can see right now that This particular system has a limit order right here, 10.5 points away from the market. Here's the soybean sell stop order at 13.72 3/4, 56.5 cents away from the market, so on and so forth. So everything is totally visible and not hidden from you, which people really like. They get to see really what the systems are doing. Now here is top 10. This is kind of fun. So here are the top 10 sessions or systems for today as we speak. One of them here is the NASDAQ. And you can also look at this as a percentage of your suggested capital or just the net result. In the previous session here, yesterday, and last month, and of course last year. So you get to see the top 10. This is a good starting point sometimes if you want to have an idea of what's performing well at the moment. All right, so with that said, I think that's a great overview, a great start for the AV Systems platform. And for what it's worth, we suggest activating systems and really letting them run and not getting too engaged. We've I can tell you about clients that do just that, where they activate systems and they walk away, and maybe 2 years later or even 3 years later, they finally decide to get out of the system. And other times we've had clients where they get involved and they're activating and deactivating on a daily basis, and I think you end up sort of defeating the whole idea of the platform, and also you end up zigging when you should be zagging, and so on and so forth. So with that said, let me go ahead and show you what's next. This is really good stuff here with automation regarding options. Hopefully you don't feel like this kid drinking from the fire hose. And I'm getting a few questions. I can go ahead and answer a few questions now. Yeah, someone's asking about the brokerage. We are the brokerage firm, and the accumulated is basically all the accumulated profits in your My System section, or since you've gone live. And the developers build all the algorithms. Some people mentioned they didn't have audio, so I'm not sure why, because I know audio is working on our side. So sorry about that if for some reason the audio is not working for you. And yeah, if the system is listed on the platform, then it is available to be activated. That's correct. And someone asked about, well, for example, if you're trading an E-mini S&P 500 system, there's really not going to be any capacity issues. There's so much volume and depth in those markets. That's really not going to be an issue. But yeah, those are good questions. And with that said, we can get to some more systems questions in just a moment. I want to show you this. Here's a comment we get. I love all this. I want to do it, but I've never traded futures. Well, I guess the response is it doesn't matter. The algos do all the trading for you. And it doesn't matter if you don't know the chart patterns or the fundamentals on any of these commodities or stock indexes. So the metals market, algos do it, energies, stock market index, currencies, you name it. And remember, futures contracts have all these particular benefits. Liquidity, transparency, leverage, alternative asset class, short or long, and cost effective. So keep that in mind, and let's jump into options trading. It's a secret options solution, automated options technology, up, down, non-directional, stock index futures options. That's what we're trading here. And why is that? Why are we doing this rather than individual stocks? Well, they're less volatile. We can use our secret strategy in this index and not with individual stocks. And of course, we're just doing 1 or 2 or 3 markets, not thousands of different securities to track. What about volatility? Here's Tesla. I don't have to go on and on, but that's a difficult thing to trade. I know if you bought it, 5, 6, 10 years ago, yeah, that's and held on to it, you're doing great. But just day by day, that's a tough thing to do. Here, GameStop, everyone knows about that. Look at the volatility in these things. So we're going to talk about trading the E-mini S&P 500. It's liquid, efficient, cost-effective. And before we do, I want to tell you a little bit about how insurance companies make money. We pay them premiums, and they take our premiums. They manage risk, but they do insure themselves. They're always hedged. They're never exposed. At least they shouldn't be. And they're consistent and patient. And they use math, just simply probabilities, favorable long-term math. Statistics, actuarials, expected returns, you name it, it's just math. Just like a casino. Higher probability outcomes, that's all the casinos are interested in, just like insurance companies. You bet on that green 0 there, you're going to lose $5.26 on average per spin. But that's what the house edge becomes. So they'd love to have you sitting there playing as long as you can, because long enough time period, they're going to make money on you. And they know this, even though they'll pay you winnings at times. Higher probability analogy here. Baseball. Is it more likely this guy's going to hit a grand slam or a single or, a base hit? Well, we know the answer. Rod Carew, he had no home runs, but he was a batting champion. Batting titles, most valuable player, so on and so forth. So the idea is lots of base hits can win championships. How do we apply that theory to option strategies? We call it high probability trading by collecting premiums. We call these base hits. We sell options. We're consistent. We're patient. We manage risk. We know we will have losers. And you manage reward. You don't want to be too greedy, but you need the proper tools to make this happen. So that's what we're going to show you. Base hits, not swinging for the fences. These are short option strategies. Non-directional, bullish or bearish, higher probability outcomes just determined by math and predetermined risk. So credit spreads, if you know this, it's going to go quickly. If you don't know it, we've made it easy. These are all insured positions, predetermined risk and reward, and they might be non-directional. So you can place trades that don't have to be bullish or bearish. They have a margin of error. Don't worry about this chart. I'll explain it in just a minute. But you see the S&P moving along here, and you'll see the calls and the puts on that trade. So these trades can be profitable in a wide range of price. But let's look at the Greeks. Once again, if you know it, it goes quickly. If you don't, it's simple. So the one thing we need to know is delta, and I'll show you about the next one. It's the approximate probability of expiring in the money. So that's sort of the secret that I guess a lot of traders don't even know. So example, 0.25 delta means there's a 25% chance of expiring in the money and a 75% chance of expiring worthless. So what can we use that information for? Well, we're going to show you in just a second, but it is not the probability of a winning trade. So keep that in mind. The other Greek is theta, and that represents time or time decay. So options have limited life and they are a wasting asset. So it's you refer to time as theta, a negative number equaling 1 day of time decay. So if an option's at 10 points, the theta is negative 0.05. That means the next day the premium is 9.95, and the next day after that 9.90, and it just keeps dropping. So that's what it looks like. As you approach time 0, you'll notice the percent of the premium remaining starts to fall. Now here's an example. This will go quickly because I'm going to jump into the demo. Here's a call spread. You sell a 35-30 call right here, and you receive 4.5 points when you sell that call. But to cover it, you buy a 35.50, you pay 2.25. The net result is you collect 2.25 points, or $112.50 in this example, minus your commissions, of course. And then here's selling a put spread. You sell the 29.90 at 3, you collect that, but you pay out a point for the 29.70. The net result is that $100 difference. Now remember, these are not naked options, so they're all covered or insured. Your maximum risk is capped. So no naked options or cats or mice. All right, and here's one thing. This is an important point. We're only doing covered options for various reasons, but keep in mind that one of the big reasons obviously is risk, and that means margin calls do not exist when you have these covered options and the way we trade them. So these are not unlimited risk. If you're trading naked options, you're going to end up in margin trouble very, very soon. I guarantee it. So Iron Condor, it's a crazy name. Don't worry about the name, but it's just a combination of the put and the call spread that we just looked at. That's what it looks like. You sell a call spread out of the money and a put spread out of the money. You collect premium on a net basis for doing that, and you look for the market to stay in that wide range. But here's a secret strategy, and it's secret only because it's something we came up with, so you probably haven't heard it unless you've worked with us in the past. It's called a dragonfly. It has 6 legs, and I'm going to show you what it looks like. It's a variation on a condor. You're collecting premium, and here's what it looks like. And I'll walk you through this example here on the calls. You sell 4 of these 37.80 calls. That's the red line. At the same time, you buy 3 further out calls, and you buy 1 closer to the money call. Now notice the one that you buy, in this case, is 50 points closer to the 4 that you've sold. So it's going to have a completely different characteristic as in terms of theta decay and the delta as well. So let's look at the puts here. Same structure on the bottom, selling 4, buying 3 further out, and buying 1 closer. And this is all done simultaneously on one order. So you don't have to worry about that. And I'm going to show you how easy we make it. But I just want to give you the idea of what the dragonfly structure is like. And I'll show you the benefits in the simulation here in just a second. But the whole idea here is that you buy this call and you buy this put, and these act as a bit of a buffer for risk, a bit of a hedge, you could call it, additional insurance, because the closer to the money call and put will not be affected by theta decay as much, and their deltas are going to be higher, so they're going to gain in value more quickly than the further out of the money options. So with that said, here's another variation, a directional strategy. You could do just half. You could just do the calls. Sell the call side of a dragonfly, collect the premium. And of course, you could do this with the puts as well. Here's something we call a bear hedge. If you're bearish, you sell an out of the money call spread, and then you buy an out of the money put spread with the money that you collected from selling the calls. And of course, you could do that with a bull hedge as well. Same kind of thing. But there's a lot of variations, and I'm going to show you this. But here's the question. This is really the question here is, where do you even start? How do you know which market to buy or sell? What strategy to use? What's the correct price? Your timing? How do you manage the risk and profit? Here's your answer, Theta Trader. Some of our floor traders in the options pit there, who actually had a lot of input on what we're going to show you in this technology. So when I say it's built by veterans and industry experts, that's no joke. These are pre-built option spreads. Our proprietary algo creates what we call theta trades, bull, bear, and flat markets, advanced strategy automation, and then automated risk and profit tracking, something called the risk thermal indicator. So that's called Theta Trader. And that's our simple and effective trade selection and management. And let's jump into Theta Trader and let's jump into a demo. Just give me one moment, folks, to switch gears on you. Okay, so now we're in good shape. You are looking at the dashboard to Theta Trader, and we're going to walk you through this here. And you'll see very clean, simple dashboard. And you'll notice right away there's a section up here called Theta Trades, and we're going to look at that. Your open short positions or open sold spreads. And then here, any open bought spreads. Sometimes we have them in the demo account and sometimes we don't. We'll add some today. How about we add some? But with that said, let's jump into a quick review of a Theta trade. And here's your account info. This is pulled directly from your AltInvest trading account. Of course, this is just a demo, and then your current quotes. You'll notice right away there are bullish, bearish, and neutral or non-directional strategies. These are all pre-populated for you and pre-built, and I'll show you that in just a second. But you'll notice here the markets we're trading, the E-mini S&P 500, NASDAQ 100, and Russell 2000. And primarily we're going to focus today on the ES. And you'll notice once again, clicking any of those tabs will pre-populate these strategies. So with that said, we've looked at a Condor and a Dragonfly, and that's what we'll focus on right now. So here's an ES Condor. Let's look at the Theta trades. Let's see what the algorithm has generated today. So here we go. You have trades anywhere from 17 to 69 days till expiration. And all the strike prices are pre-selected, all the values and everything, and we'll show you that. And let me explain this here. This profit potential at expiration, it's calculated for you, and then your targeted annualized return at expiration. I'll also point out that this is all net of trading cost, and I'll show you a little more, but everything is net, the net result. And keep in mind, you should not expect to generate 196% a year. That's not what that number means. It's just comparing one trade to another. That's really all it means. And with that said, we'll go ahead here and look at this particular Condor. So we click on it. You'll get an expanded view. First thing I like to do is look at a chart. So here's the call spread we're selling above the market and the put spread we're selling below the market. And you'll notice there's 69 days till expiration, gives you the expiration date, the settlement value, and your net premium collected. And we can jump down. You have your maximum put risk, call risk, commission cost, available capital, cash required. And let me run you through this real quickly. So once again, here's your profit potential, and here's your targeted return on cash, just over 10%, and your targeted annualized return at expiration. But you should also note that we never suggest holding these trades till expiration. We always want to be out before expiration, whether it's for a win or a loss, and we can automate that. So that's important to remember, and I'm going to show you that. But here's the question we get. It's $908.50 to place the trade, but yet your maximum profit potential is just over $90. So it seems a bit asymmetrical. But actually, let's take a look at what we're really doing here. You're selling these puts, the 3350 puts, and the delta is 9.93. So that means there's over a 90% probability that these options are going to expire out of the money. And then look at the calls we're selling, the 4260s, 6.71% delta, so approximately 93% probability that these options we're selling will expire out of the money. So these are the higher probability outcomes that we're talking about and that we look for. You can see the algorithm has pre-built the trade. It's already calculated the values for us. Quantity always defaults to 1, but you simply click here. If you want to do, for example, 5, you'll see the numbers reflect the different quantity. We'll do just, how about we do kind of an odd 6 unique number there, and keep the price at 2.25 and then place the order. And that's it. That's all you have to do to place that order. Okay, so now that you've done that with the Condor, you're kind of curious about the Dragonfly, perhaps. Now I'm going to go back and same type of thing. Instead of a Condor, you would look at the Dragonflies, and here are the Dragonflies available. And we'll go ahead and look at this May end of month Dragonfly. So here you have the structure of this Dragonfly, and you'll notice the spacing on the calls and the puts. In this case, 50 points different between the lower strike price call compared to the ones you sell. Same thing with the put, but that can be different. The algorithm will make it different sometimes. Sometimes 40, 50, we've seen 60, 70, sometimes 30, it just depends. And you can see here, everything is pre-populated with all the strikes. You'll notice the cash required, of course, is greater. We just round up. We just tell people expect about $5,000 for each Dragonfly. The targeted return on cash is a little bit less on a Dragonfly compared to a Condor, and that's simply because you are buying this call and you're buying this put, and that costs money. So that additional insurance or hedge is costing money, and it lowers your potential target. But of course, there are advantages and benefits to having that in place, and I'll show you in just a second. And once again, you're selling these higher probability calls and puts here. And the default here, it always defaults to a quantity of 1. Let's say we're doing 2 instead. You notice cash required jumps up to 92.83, and we're selling this at a price there. And there it goes. Just that simple. Now let me show you the difference between a Condor and a Dragonfly. And I've run some trade simulations. You can do that right here under the simulator. So you can go backwards in time and backtest any of these strategies. And I've loaded some to save some time. Let me squeeze this down. Now, this is January 2 of last year, and here's a Condor. We can use these controls at the bottom to go forward day by day. Let's see here, that's the 2nd, the 3rd, the 6th, and you'll see the P&L on the trade, and you'll see the RTI, and that's called the Risk Thermal Indicator. It's color-coded, and I'll explain that as we go. Or we can use this play button. Okay, this is interesting. It turns yellow. So this Condor trade turns yellow. It's losing some money, but the algorithm says don't do anything. Yellow is just a little slightly elevated risk, but there's still nothing to do. And now look at this. It turns orange, which is elevated risk, and then it turns red. Too much risk. Get out of the trade and take your loss and move on. So that was on February 28. This Condor triggered a loss, and this can be automated. Once again, if it turns red, get out, and this can be automated so you don't have to watch it. ThetaTrader will monitor and track that trade for you. But so on the 28th, this turned into a losing trade. However, if on that same day, January 2, instead of a Condor, maybe you had placed a Dragonfly. Let's see what happened. So everything's green, do nothing. The P&L is kind of going back and forth between positive and negative, no big deal. Turns yellow, slightly elevated risk, but still do nothing. And look at that, it turns blue. What is blue? Take profits. That's your profit taking signal. And you can automate that as well. So that was on February 21st. You had an opportunity. This dragonfly was mature enough, it ripened enough, so to speak, to take profits. And on January 21st, the Condor was still actually $3.50 negative. So there's a completely different characteristic, and you can see how a dragonfly can act much differently than a condor. Let's look at another trade. The 14th well, I guess that's 2 years ago now, isn't it? Here's a condor. So far, so good. Trade's a little profitable. Everything's green. And look, finally, with 2 days left, it turned blue, take profits and get out. But you had to wait for a long time to be able to pull the trigger on that and close that out for a gain. Now, if you had done on the same day, Valentine's Day, a dragonfly into month April, same thing, instead of a condor, you do a dragonfly. Look at that. On March 28, you were able to take profits on that trade. Remember the condor? You had to wait till the very last, almost the last day. So March 28 here, the condor was still not at a level where it generated a blue profit taking signal, but in this case on the dragonfly, it was able to generate a profit taking signal simply because of the trade structure is different. Once again, you own this particular call, and if prices are moving higher, it's actually gaining in value at a more rapid pace, and you own it, so it becomes more valuable, and that gives you that difference there in terms of being able to get out of a trade for a profit with over a month of time left compared to getting out with, in this case, only 2 days left. I'll look for another one here. People like these simulations, so I picked another one. Here's a condor. You notice here it got elevated, started losing money, but still the algorithm says don't do anything. And here you go. You took profits with 7 days left. Now, how about the dragonfly? Look at that. With 34 days remaining, it gave profit-taking signals much, much earlier. So you can turn your money over much, much more quickly a lot of times with a dragonfly compared to a condor. And now let me show you how to do this right here under my account, your settings. You click settings and you go to your account settings, and this is how you activate the risk manager and the profit directive. So that everything's automated at that point. Theta traders tracking those condors and dragonflies, and when they turn red or blue, if you activate these, then you don't have to monitor it, screen watch, babysit your trades. Theta trader will automatically process those orders and place them for you. And then here I want to point out we have our daily research, something called TradeScope. And I'm going to show you how to track closed positions as well, but I just want to get to this while I'm here. We do our daily analysis and our market outlook, and also we have daily commentary on the markets. So that helps kind of inform you as to particular trades. Yesterday we had a lot of trades, condors, dragons, in the month, Russells, a lot of activity. And then we have a great help file as well. You'll notice we have all of the RTI indicators described here in terms of the color coding, all the spreads more described in depth. And then there's also tutorials here, videos. These are videos here on the Theta Trader platform, and also education. So that's all available in Theta Trader. Now let me jump back, and I want to show you here, you have open short positions and open bot positions. We don't have any bot positions at the moment, but perhaps you want to add You want to add one. Maybe you think this recent dip in the stock market here, it's been shallow, but maybe you are perhaps bullish. Maybe you want to do a bull hedge. We'll do a bull hedge here. Once again, all this is pre-structured. Perhaps we'll do 8 of them. And we'll put that bull hedge in place. You can see it, and we'll go back to the dashboard. And there it is. You see the long call spreads that are part of that bull hedge. So just want to point out that we can do short option spreads, but also long option spreads. And you'll notice here, you can look at all your closed positions on one page. You can filter for the month and the market, the date and whatnot, but we're just looking at everything here in this demo account. You'll see a total of 20 on the page, 18 winners, 2 losers, your total P&L, your short positions, 15 winners, 0 losers, bought positions, 3 winners and 2 losers. That's common. Remember, you buy options and that's a lower probability outcome. And it's just a demo account for these webinars, so don't make too much of the results of this. I just want to point out that all this is available here, and if you want details on any trade, you just simply click on it, and you can look backwards in time at that trade. And you can see here, it gave on the 9th a profit-taking signal, and that's all automated once again. And of course, open positions. So you can see your open positions at a glance, and you'll notice, once again, there's more depth and more granularity and detail. I just clicked on that one, it's highlighted gray, and then you scroll down, and you can see here, traded March 17, that's the first date, so not a lot of data there. But so far, so good on that one. All right, now there's the best feature of all. I saved the best for last, and I think that's a good review of the dashboard for Theta Trader. We could go spend a little more time with it, but we don't have all day, and I want to respect everyone's time. And with that said, I want to go ahead and show you the best feature of all. In fact, let me jump on some of the questions real quickly. See if there's anything I need to get to for the moment. Just a second, everybody. Yeah, people are asking about account types. Yes, we can handle any type of account, including IRAs. There are some qualifications for that, though. You can chat with me about that, and I might get to that in just a second anyway. And in terms of the systems, each unit of the system is one contract. So if you license one unit for $50 a month, that's for one contract. Yeah, dragonflies, good question. It depends on the environment in terms of the expiration date. So the algorithm is going to anywhere from sometimes could be 30 to 70 days, just depends. Yeah, someone's mentioning the slides are giving them a little trouble. I'm not sure how to respond to that one. Sorry about that if you're having trouble with the presentation slides. And yes, we're doing just futures and futures options. And we'll just go ahead and move forward. There's some more questions there, but I think I'll answer some of those as we go. So this is how to make it even easier, folks. 1-minute trade alerts. And what am I talking about? These are one-touch responsive alerts. You simply accept or reject with your phone or your pad or your device. These are live and they're integrated with your account. So something I don't think you've probably seen before. So you touch accept and then the order's placed, and it's that easy. Here's an example. You get a description of the trade, you get a graph. You'll see the premium collected, the cash required. Notice this here, selling 10. Okay, this is pre-sized for your account. You don't have to change a thing. The trade comes to you, it's already pre-sized for your account, and it's not going to be a redundant trade. You're not going to have a concentration of strike prices. Um, if you've already got another trade at a 3,500 strike, you're not going to get another one at or even near that price. Okay, so days till expiration, targeted annualized return, and you touch accept. And that's it. One more time, you just get a text alert with a link. Okay, folks, so that is the alert, and I'm going to show you how to get involved. So we're going to package everything up, offer you what we call the VIP membership. Let's run through that, and we'll probably have some time for questions later. AV systems, the automated futures trading. You saw how easily that works for you in terms of being able to filter and select and activate trades. Professional developers, thousands of systems, multiple markets. Everything's transparent. You just turn them on and walk away. Automated. You've got day trading or swing trading. You can watch live performance, stock indices, currencies, bonds, metals, energies, grains. So how much would it cost if you want to develop your own trading system? Well, we've spent we spent millions of dollars over the years on Forex and futures trading systems and options trading, obviously. It's costly, it's time consuming. You calculate just one system, one programmer, one algorithm, one market, you're probably talking over $10,000. But remember, there's over 2,000 systems on the AV Systems platform. You also get our A-list research, so we're going to work with you and review our top picks. You'll want to know if your systems that you're looking at are on what we call the A-list, and we'll work with you and develop allocations. So that value there in that research, over $2,952 for that A-list research. So remember, AV Systems valued over $10,800 just for one system. The A-list research, $13,700. And remember, there's Theta Trader. We just talked about the algo-driven option solution. So Theta Trader software, that's a proprietary algo. We have professional traders work with us developing that. And after having done this for 3 decades, we put all of our best thoughts into Theta Trader. Simple, effective selection, simple trade tracking. Here's what it looks like at a glance when you're doing some of these short option spreads. And here's what it looks like with a brokerage statement. So you'll never in a million years be able to figure that out. That's partly why we developed Theta Trader too. So you have the risk thermal indicator, color-coded, automation, everything's autopilot. It turns blue, you're out. It turns red, you're out. You can do back testing with our trade simulator. You saw several different back tests that we ran through. You can use those buttons down below to go forward and backwards in time. So you have Theta Trader, the RTI, and the trade simulator. So that software valued at over $3,500 for Theta Trader. And here's really the best feature of all, I think, with Theta Trader, those alerts. These are integrated with your trading account. So every trade is unique for you and your account, and the alerts are live, meaning they're integrated with your AltaVest trading account. You simply touch accept and the order is placed. And then, of course, the RTI will automatically put things on autopilot for you. And that software, $4,400. In fact, I know people are spending more money than that on that type of software. So with that said, you have Theta Trader and the alerts over an $8,000 value. So just to review, the VIP member, AV Systems and Theta Trader and the alerts, a value of over $21,000. Okay, but here's the best part. This is how you kind of tie it all together. Something very unique you're not going to really get anywhere else at a typical brokerage firm, especially a stock brokerage firm. You have a private coach. So that's all part of the VIP membership. One-on-one training with a licensed, experienced trader. You get 1 hour screen sharing sessions. You can't stress this enough how valuable it is for people. Just an example of these coaching sessions, some of the topics you might cover: system selection and activation, deactivation, diversification, and then of course with Theta Trader, you'll look at various theta trades, some of these options, alerts that you might have questions with, and then some more even advanced strategies. So you have a co-pilot working with you. This person's licensed and experienced, and we're not just phone clerks people, and they'll be able to discuss and review your trade history. $7,500 value for that coaching, absolutely. People spend $25,000 to buy options trading education, and that's all good and well, but what I'm saying is with Theta Trader and your VIP membership and AV systems, we provide the information you need. So to summarize, AV systems, Theta Trader, the alerts, the coach, $29,000 value. And remember, we talked about our daily research with TradeScope, the tutorials, all that proprietary research, a value of over $32,000. So the VIP membership, we think it could be the one thing that works for you. It could save you hours of time, cancel other subscriptions. You could lower your aggravation. I think it certainly does with a lot of our clients. They tell us that. So I think it's the answer that perhaps you've been waiting for. And here we go. This is no hyperbole. I know I talk to people, and I've done it in the past. I've spent a lot of money on trading materials, software, systems, you name it. But with a VIP offer, you have AV systems and Theta Trader and the coaching. $19.97 is what we typically offer just Theta Trader in terms of the pricing at any live events that we've done over the years. But we're going to offer you the VIP membership, 60% discount, $7.97, and that's just a one-time payment. It's not a monthly, quarterly, or yearly. $7.97 one time for VIP membership. There's the link, cf.altvest.com/VIP. There's our phone number as well. And here you go. No excuses. Even if you're thinking about, you're not 100% sure, get signed up. And if it doesn't work for you, in 30 days, we'll just refund that for you. Really, if it's not a fit, it's not a fit. And if it's not a fit for you, it's not a fit for us. Now, a few Q&A here. How about lowering your tax rate by 10%? Well, you can. Futures are tax efficient. Okay. 60-40 blended rate. And what am I talking about? Well, your gains, 60% of those are taxed at the longer term capital gains rate. And those rates are lower than the personal income tax rate. So here's an example. If you're trading stocks, 100 grand, 20% return, you'll have a 12.6% return. You trade futures, you'll have 14.64% return, tax savings of over $2,000 just because you're in a tax efficient space. That's where we trade, with tax efficiency. No more itemizing as well. No wash sales or anything. You just get a 1099 with one figure. That's it. So IRA accounts, yes, you can do self-directed IRAs. There are some benefits according to Forbes. Diversify portfolio, add investments with low correlation to stocks and bonds, perhaps control volatility and limit downside risk. So ask us for details on IRAs. There's some experience and perhaps or financial requirements for that. Now, FAQs, why the E-mini? They're liquid, they're efficient, they're cost effective, and they are, how can a mini be huge? 2.5 times larger than all ETFs around the world. Did you know that? The E-mini S&P 500. So this is the space you want to be in, folks. Average daily dollar volume compared to the SPY, over 10 times greater on the E-mini S&P 500. And what about the E-mini options? Well, large volume, liquidity, access, 1.5 million average daily volume in January on just the options on that one ES market. That means you have superior execution, cost savings of $4 to $15 per contract compared to SPX options. That means you have tighter bid offer spreads, largest market share. So there are densely packed strikes, more than 100 annual expirations, granularity, and coverage. And that's important because if the algorithm says you're doing a Condor or Dragonfly and it's searching for strike prices, calls, and puts, the strikes may not be there if you're trading in a different market. So you just have no trade to place. So that's why that granularity in the strike prices is important in what we're doing. So you can't do this with typical stocks. You just can't. You can track one or two markets, not thousands. Efficient margin versus stocks, and clear cost structure. It's not opaque or hidden. So no hidden costs. These are not securities. This is not Robinhood where everything's hidden. I'm going to, kind of hammer on them in just a second. Everything trades at the CME Group, largest publicly traded futures exchange in the world. Everything's electronic on their Globex platform. So that means every order you place goes and is routed to the same electronic platform for all large or small orders. Every order is treated equally. No payment for order flow nonsense. There's none of this Robinhood and this free trading model that's not free. Payment for order flow is the fleecing of the retail investor. Okay, so if you're trading stocks, that's fine. We all trade stocks, but just keep in mind, it's not free. So there are actually no such thing as zero commission. You probably aren't getting the best execution, and you probably trade more actively, increasing the risk. So it's not free. SEC has fined Robinhood, misleading their customers. Robinhood fined here, you save a penny, but lose a nickel. That's a good way to look at it. And if you're not paying for something, you're paying for it in a way you can't see it. So I think that's the important point to make there. They offer inferior trade prices. So that's what happens when you place your orders with these other stock brokerage firms. You just get inferior trade prices even though they say it's free. It says here, Fidelity gets better execution than Robinhood because they don't take rebates. Just an example. It's not commission free, folks. Orders were executed at prices inferior to other brokers. Nothing of value is truly ever free. All right, so I've beat up on all that enough, but my point is it's kind of annoying when you see all this marketing about free trading. It's not free. So here's the question. What about our rates? 525, that's round turn all in, and that's completely transparent. Here's a big box brokerage firm from their website. They say they're charging 2.25 per contract. And you think, oh, gee, that's less than 5.25. Well, first of all, that's per side, and they don't add the exchange and regulatory fees on top of that, which ends up being more than what we charge. So our rates are competitive, and beyond that, we're offering a completely different level of service than these other brokerage firms that have just phone clerks. So very competitive rates. Data traders' performance, well, everyone is self-directed. Every client makes their own trading decisions. But as a reminder, all performance is net of all trading costs. That includes AV systems and data trader. What size of account for a VIP membership? Well, if you want to do option spreads and multiple systems, I suggest $50,000 to $100,000. And if you want a free VIP membership, absolutely. $100,000 account size, we'll just rebate that membership fee to you. People love to take us up on that offer, so keep that in mind. An IRA, individual, joint, corporate, LLC, trust, you name it, you can do all those. And alternatives may improve diversification and lower portfolio risk. And once again, this is all the alternative asset class that we're talking about. This is kind of fun. The running of the bulls, this guy's chasing the bulls. Look at this, total market cap, GDP to market cap valuation at record highs. This is actually just of this month. So I don't know, are we chasing a bull market? Maybe, maybe not. It could, certainly keep going with the way the Fed works, just pumping liquidity into the market. Record stimulus is fueling stock markets. 58 billion poured into the stock market. So really, you have the S&P 500, which is really the S&P 6. So that's pretty amazing there. That's a couple months old, but I don't think that chart, but I don't think it's really changed a whole lot. Probably worse. So just keep it coming, Dr. Yellen, the easy money and the Fed monetary policy. But with that said, we like alternatives. They have a low correlation to what's happening with traditional investments. They're not correlated to any benchmark. It's called an absolute return instrument or space. With that portfolio 3, you have 20% of that portfolio allocated to alternatives, which we'd like to be a part of. So with that said, here's to summarize the VIP. You have AV Systems, the automated futures. You have Theta Trader with automated options. Remember, pre-selected spreads, non-directional or directional. You have automated trade exit and integrated trade alerts. That's a huge feature. People love that. And then to tie it all together, the personal coaching. So if you want to be part of a winning team, we'd love to have you with us. And there is the final slide for the day. And I think I answered a lot of the questions that I see already, but let me see if I can jump through some of these here. Someone's asking about being a novice. Well, certainly you'd want to understand the basics for futures and options. But along the way, we can work with you as well. Yeah, there is a recording. That's correct. Yeah, I answered yeah, we are the brokerage firm. So, yep, we talked about the commissions. And for $7.97, that's your VIP membership. So you see it right there on the screen, what's included with that. And what else can we talk about here? Yeah, everyone's performance. Someone's asking about performance. Well, of course, everyone, just like any account that might be trading at the Schwab brokerage firm, for example, everyone's account has different performance. We do not manage money. And someone says that the link is not working for them. If that's the case, I apologize, but let me double check that. And if not, I'll fix it in just a brief moment. But yeah, I think the link is working, cf.altivest.com/VIP. There's our phone number as well, if you wanted to check in. Yep, there's the link for that. Thank you for that. Okay, and if there's a few more questions, we have time. Let's see if I can do that. There we go. All right. And yeah, I just double checked the link and we've added it here to the question chat box. And other than that, we look forward to hearing from you. You can certainly call us or email us or go directly to the form and become a member. And once again, there is a 30-day guarantee, and we've never had any issues with that at all. If it's not for you, we're not holding you captive to trade with us. So we've been doing this since 1997, and we've got a reputation. So we're going to work with you at whatever level you need us to work with you at. And other than that, people do love the services and the technology. It makes their trading just a much more user-friendly experience. That's the whole idea behind doing this. All right, any other questions, folks? Yeah, oh, someone asked about, yeah, it's all web-based. So everything is web-based. You don't have to have uh, anything downloaded or what have you. And when you get the alerts, those just get sent. You'll get a link, a text message sent to you, and you touch the hyperlink, and then that takes you directly to the alert that's live and integrated with your trading account. So you don't have to have any special download or app or anything. And in terms of opening accounts with us, absolutely, people transfer accounts to us all the time from other brokerage firms. We work just like any other brokerage firm. You would um, get onboarded and then fill out the account application. It's all electronic. And then when the account number is ready to go, you would deposit funds via either a bank wire or ACH, or just with transferring an account to us. So absolutely, that's easy. Okay, I think I've answered some of these others. Yep, $7.97, that's one time. It's not a recurring charge. And someone's asking about, we suggest $50,000 to $100,000, but of course that's not written in stone. I would say that, for example, you could do uh, perhaps as a bare minimum, I'd say 25. Otherwise, it becomes more difficult. You get more and more limited. You just won't have as much opportunity, but that's just the way it goes. But you could still do it. All right, ladies and gentlemen, we've been here for a while. I've taken up a portion of your day, so I appreciate you joining me. And oh, here's a good question about the trading systems. Some of the systems are available at free because the developers want to sort of build a name for themselves. And I'd say on average, you're talking of maybe $50 per month is really what they charge. Sometimes it might be 100 or 200. That's kind of the exception to the rule. And other times they might be $20, $25. But I would say $50 is probably an average. And once again, all the performance is net of all those monthly costs and commissions. So everything is performance is all net. All right, folks, I invite you to email me anytime. You can use info or just use my name, Erik, E-R-I-K, at altavest.com. And there's our phone number there. And there's also the link there. You see the VIP link. It does expire Sunday night. So if you want to get on board, just get the discount and get yourself started. We'll get you onboarded and take it from there. All right, thank you, everyone. Thanks for joining us. And hopefully we'll hear from you soon. Bye-bye.